Hello, everyone. Again, this is Chris Haven. I'm the Director of Investor Education at Personify. This is part 3 of our day and swing trading, which can also be used for long-term trading, which will be continuing on with charts and technical analysis. Again, if you have any questions, you're more than welcome to unmute yourself and ask questions or type in the chat. But before we start, let me just remember, because time frames and lengths when we talk about this stuff, it's very important, because usually, and I even looked up online today, when you see a lot of these technical indicators being talked about, they'll say 20-day. They'll use the term day rather than what it actually really means, which is length. So, and that's, if you remember from Thursday when we talked about lengths, and you can modify those. If you obviously, again, M is minute, H is hour, D is day. So if you're looking at RSI, for example, the default length would be 14, but it's whatever your chart is looking at. Okay, so if you're looking at a 1-minute chart, so if it's a 1-minute chart and the RSI is 14, you're just doing the math for that. So 14 times 1 minute, you're only looking at 14 minutes of data. If the RSI is set length to 14, 1 hour, so that's, times 1 hour. So I'll put 1M, 1H. So you're only looking at 14 hours of data. So it's really important to remember that, because a lot of people, they just look at things and they may read something and they may get, because of how it's worded. So just food for thought on that, okay? Just real quick, again, we talked about the MACD. So again, remember, the strategy is it combines moving averages and you follow lines to see formations. When they cross or intersects, you buy or sell, depending on how that is. So if you don't know what I'm talking about, just look at our previous video, and that will go over most of the MACD. We talked about the Fibonacci sequences. So again, if you didn't know that, go back to the previous video. So now here's the big one that I do like to use. A lot of technical analysts like to use it. This is the Bollinger Bands. And what the Bollinger Bands do is hold on one second, guys. What they basically do is it gives you kind of like a bubble. It's similar to Fibonacci sequences, but it's not. It determines standard deviations, and I'm going to show you what that is. But just so you know, the period or the length is set to 20. So that's why I was talking about the lengths before, because if you have it set to 20 of a day, for your chart, then you're going to get a good idea of a 20-day of your bubbles. And I'll show you what this looks like in a second. So one thing about standard deviation, and I know this isn't a math class. I mean, it technically is, no pun intended on the technical. But, all of these things that we're learning it is math calculations. And I really feel that if you and this is just going to take a minute or two, so we'll add a little snippet so you can skip this part if you already know what standard deviation is. But basically, a standard deviation is if you take your average. One deviation is basically it's encompassing a certain percentage of what's calculated. Okay, a very easy one to know is you look at a bell curve. Okay, that's a bell curve, I know. But when you look at one standard deviation between the average, that means it's roughly 66% of the data. So when we talk about standard deviation, we're going to be looking at averages. So it's actually Bollinger Bands look at a simple moving average of 20, and then it calculates the deviations between them. So when we talk about deviations, if we talk about the whole population, so this whole amount was actually 99.7%. And then you have you have 2 standard deviations, which this would be considered 95%. So just something to think about on that. If you want to learn more about standard deviations, just Google it. It's on Investopedia as well, so that's a good resource. But when we talk about one deviation length, which I'm going to show you, and two deviations, we're encompassing where things can go, what the averages could be. Okay, so that's the end of the snippet on that part. So this is what this looks like. I wanted to show this first before I pull it up on Thinkorswim because I wanted to show you what it can look like on another broker. So this is Webull, and I chose Palantir. This isn't the right day for Palantir, but this is kind of what it looks like. So you'll have your chart and your candlesticks. I have the MACD down here. If you can see, here's the volume. Let me actually label those so you can understand everything. Let's go lower. So these are your candlesticks. This is the volume. And then I just happen to have the MACD. Okay, kind of going back, what the strategy is, and I'm going to put this, sorry guys, makes it so much easier to do this. So the strategy for when you deal with Bollinger Bands is it shows a bubble of the current moving average, and then it uses standard deviations, so the averages that it could be, to give you support and resistance prices. So before, we talked about trend lines. We talked about where the extremes could be with the wicks. We talked about, a lot of ways. So this is just another way to get an idea of where supports and resistances can be at the time given. Okay. So it's different than saying, okay, I know this is where it's going to be, but it can give you an idea of where it's going to go. Or what it could be. Okay, so if you see right here, and I'm going to label all these for you. Let me change this to, we'll do yellow. So this middle dot, this middle line right here, that's going to be your moving average of 20. And then you've got two deviations, and I'm going to type this out for you. But it's two deviations from where it was from the average. So it's not taking the deviation from where it's at. It's taking the deviation, the deviations from the average. Okay. So I know I'm saying some more higher statistical math things. So if you don't know what that is, just basically think that it's taking the average and it's calculating based on from the averages, so 20. So I set this to 20 before. It's calculating where it can go, two deviations across. So two deviations means 95%. So, so to further explain it, that's a whole different video. That's math. So I'm just going to move ahead. So just the simple terms is if you see it hitting the top part of the bubbles, it's hitting a resistance line, but that doesn't mean it's going to continue going, or it may not be going upwards. It could go downwards. It can go either way, but it's telling you something. Okay, so I chose this because this is a really good explanation. Because if you see right here, just draw it. I'll use a green. But if you see right here, and so I'm focusing on this little part right here for Palantir. This was from, I don't know the date, so I'm sorry about that, but from 1 hour, from 1:30 p.m. to roughly 1:50 p.m., you can see right here, it's continued to hit this bubble, this deviation bubble. So what a strategy can be is if a technical analyst was looking at this, this is then when you look at your other indicators. So if you can see the MACD, if you see right here, if you see your MACD signal, of course it's black. If you see your MACD signal, which is, again, remember MACD starts from 26, or I'm sorry, the slow is 26, the fast is 12. So you're going to get a signal earlier with the MACD than you would if you have it at the average of the Bollinger Band, because the Bollinger Band is 20. So basically, remember, like I was saying with length, if it's a lower number, it's going to be faster. So here's where you can start looking at trade ideas if you want to get in and out for day trading or for long term too, because you can just switch the chart day or the chart time, and so you can switch it to 1 minute and trade something within 30 seconds or 2 minutes, or you can set it to a day so you can trade it long term. Or you can set it to a week. You can set it to whatever you want. So that's what's nice is all these strategies can be used to then go for whatever you want. So, and that's a little thick on that part. But if you can see, it crosses right here. And notice the MACD is showing it's going upwards this whole time frame. Then you look at your Bollinger Band. So notice it keeps hitting it. So again, this is kind of like what we were talking about, how it would be hitting those trend lines. But these trend lines for these Bollinger Bands, are continuously drawing themselves. This is just solidified because it's already data that's already been shown. But if you see, yes, it goes past it. Let me see if I can zoom in. I don't know how to zoom in on that. But you can see there's little wicks that go past this, but it does go downwards. So this could be a trend signal of it being bullish. So I didn't have RSI on this, so sorry, you could look at the RSI as well. But again, these are just more tools for you to look at to then determine, is this a stock to get into at the time? Or is it something to maybe be like, oh, I'll wait and see? Okay. So just looking at just how this goes, notice you see a trend right here. Yellow. Notice right here, it goes downwards. Let me do a different thickness. One second, guys, sorry. So notice it was trending downwards and then it hits, but look right here. See, it's still going down, but then it actually hits right here where it crosses. Now, yeah, you could have gotten in a little bit early, but that's that's fine because not everything's perfect. Okay, but then now it starts to go upwards, continues down, but then it goes past and then continues upwards. So again, now when you're looking at these bubbles or these lines, these again are just telling you where it could possibly hit for resistance, then to go downwards, or vice versa, where it hits your support. Okay, so there was one thing I didn't really talk about with the moving averages, is if something tests a line, and I did that on purpose because I wanted to include it with the Bollinger Band. But before I go on, are there any questions just simply seeing how the Bollinger Band works? Again, remember this line, this blue line right here, this is your moving average. These lines that are outside, kind of like a shield or a bubble, this would be your resistance lines. These would be your support line. But any question on that before I go on? So hopefully if you've taken the last two classes or seen the last two classes, this would make more sense than just jumping right in. But again, there aren't any bad questions. So if you have any questions, you're more than welcome to ask, because this is different from the other indicators. So you still can learn everything by seeing this. It's just there are other things that I talked about. Well, thank you, Connor. Okay. So some other strategies that you can use with this is you can see, and I'll type it. So another strategy is, so the question is, were the previous videos, are they easily accessible? Yes, they are on the YouTube channel. The first one was posted, and the second one is going to be posted today. Third one, I think, is going to be posted, I think, maybe Monday or Tuesday. So far, let me list all the strategies that we've learned so far. Okay. So the first one we learned is just the moving averages. And that's, just kind of seeing is it going up or down? We talked about drawing trend lines. So that's basically looking at the bigger picture. Where do things go at support or resistances? Yeah, I know we're supposed to use an A. Okay. The next one is RSI. Do we look at things overbought or oversold? I'm doing this for a reason, guys, okay? We looked at the MACD. So that's showing, bull to bear trends. And then now we learned the Bollinger Bands. Oops. I don't know how you spell that. That's how you spell it. Okay. So here's where now we talk about and this is just a very short segment. Let me just show you real quick while I pull up Thinkorswim. Okay, so let me just get rid of everything so you can see. Oh, we talked about Fibonacci sequences too. That I won't put that there, but just remember we talked about Fibonacci sequences. Okay. So I'm going to remove all the studies. And I'm going to show you now how this can paint you a larger picture. The first one I'm going to add. So again, you can draw the trend lines all you want. I didn't talk about other types of trend lines. I just talked about, just kind of seeing where things are hitting up or down. I know some people will talk about slanted trend lines. I haven't talked about that yet. Again, there's just so much information. Okay. But the one thing I wanted to talk about is when I add in, so I'm going to add in my moving average. Now remember, it defaults to 9. I'm going to set mine to 20 or 50. It's up to you. Remember, 50 is a longer time frame. 20 is a shorter time frame. So if I were to be on the day chart and I set this to 20, I'm looking roughly at 20 days of data. Now, here is an additional strategy is, again, we talked about where things will touch certain parts. When you have a moving average and it's drawn on your chart, you could say if something tests the line, and we've talked about that word before, but notice here and here, from the moving average, this candlestick tested or touched the trend line of the moving average of 20. So you can say if something tested it and then resumed upwards, and you can see the moving average is still going up, then a strategy could be this is likely bullish. Notice how it touched it again. It tested it again. Didn't go as much, but it still did. But then it went further up. These can be technical indicators to tell you that this, obviously that this stock is going upwards. Now look at these three right here. Now again, these are 1 days. So here it approached to test it. So you could say, and this is why I'm not showing the other indicators on purpose, just so you can focus on this. But you can say, hey, this is approaching the moving average of 20, or you could do 50, or you can do 100. You can do whatever you want. And this again can be on a minute chart, 5-minute chart, whatever chart you want. So if you're monitoring it to day trade, you could say, hey, in a couple of minutes, this could test it. So maybe I should short it, or maybe I should buy a put. Maybe I should buy a call, because if it went so far down, likely, it could hit what's called, a support, and then you'd want to go upwards. Again, that's up to you on how you want to go about it. Notice the next day it passed it, went down, but it ended a little bit upwards. Then you see this was, this was May. So I don't remember what happened in May, but this is when it went further downwards. So now when you look at this little strategy, is this went below the average So then you have to use other indicators and other tools at your disposal to then get an idea, because this could now be forming a bearish trend. Okay, just little things. Now, it doesn't happen all the time, but it does. You can see it happens right here that it tested it there, but see it continues going upwards. So those are ways for you to determine, you know, where things could be headed. You can say, oh, it's approaching it, but it didn't hit it. So that's when you may say, okay, maybe I'll do a stop loss. Maybe I'll do a profit target. Just whatever whatever you feel is necessarily needed. Then you can see again, did the same thing. This was June. Same thing here. Notice it looked, and then this was the coronavirus or the Delta variant scare. That's when it went all the way down, went past it. But then it tested, continued upwards. So that's, again, another strategy. I'm going to now put everything together. So with that, are there any questions just with this little trick that I showed you? Because you're going to see, so now we're going to literally turn this chart into a painting. Okay. So okay, so we have, so now if you think about this, I set my moving average to 20. So that's 20 length periods or 20 periods. I'm now going to add my RSI. Second. Now, how you have these set up, you don't have to use all these, because definitely if you put too much stuff, just think of it, you have a lot of flashing lights or things to that matter. It can be distracting, and it can make you overthink things, and it can make you miss a trade. Excuse me. So I added RSI. I'm going to add the MACD. Oops. Study all studies. Okay. And then what was the other one? Fibonacci sequences. Oops. Oh, and then the Bollinger Bands, which I just talked about. Sure. Okay. Add study. All studies. Oops. One thing with Thinkorswim, guys, just so you know, that if you even just move it just a little bit off, like a pixel, it will close. It'll drop that box. So just be careful, because I moved my mouse a little too quick. Okay, so here's now. This could be a day trader's chart. So now this would be if you were looking at the long term, because I'm on the day. So you can trade this however you want. If you want to do, a 1 minute chart, then you would be trading, on that. But let's just look at the day, and let's just see what we have. So one thing that I notice is, notice how these two are the same color. So if you're using Thinkorswim or any other chart, if these colors are the same, change the colors. It takes time to remember them. I know for me it was, it took me a little bit, but do whatever color that you like. I mean, I'll do gray. Nope, that's not a good one. I will not do gray. I'll do baby blue. Nope, that's still confusing. I'll do whatever that color is. Oh my gosh. Okay, I'm going to create my own color. Jeez. I'm going to do, I'll do a light teal. Yeah, well, so I'm just showing you it can be hard. I'm just showing you that, this is why I like Thinkorswim. If you hover over a technical indicator that's on the chart, it will highlight what that is. So see how these highlight, these three lines highlight, this guy highlights itself. So if I were to look at this as a technical analyst for day trading, what do I see? Okay, moving average, it's going upwards. So let's draw that. Okay, So I know it's going upwards. Look at the MACD. Okay, so there was a bear signal right here that crossed, and it was going downwards, which it was evident by this. Now, this was an extremity. If you remember, that this was when everyone was saying, you know, it's Blood Red Day. You know, who are we sacrificing? To the lamb gods or to Cthulhu? You know, whoever you want to sacrifice to change. And apparently, it worked because it rebounded. So now remember, like I said, this is all math. So it takes these extremities into the equation, no pun intended on that, but it takes it into it. So that stuff you have to also look at too, because notice my new indicator, my Bollinger Bands, this is all over the place now, because notice it could go as high for my resistance to whatever that is, 4,400, even though it's down to 4,323. Now, with this is futures, that's a lot of points. 80 points is a lot. That's $4,000. So yeah, okay. But you know it's hitting this resistant. I'm sorry, this support band. I call them bands. I don't know what they're really called. I call them sheet bubbles, bands. You know, it's whatever you want to call them. So these can help you determine also the direction of the stock. So when I look at this, so see the MACD is still going downwards, but look what's happening to the stock right here. It is going upwards. So MACD, remember how I said statistically RSI is a better indicator, but this can still help you. It's just kind of like, you know, if you were a teacher and you call on, you know, like your star student all the time, but then you got, you know, the one student in the back that will get the answer right sometimes just by pure whim. It's kind of what it is. But he's still smart, but he just doesn't want to contribute as well. Okay. So notice RSI is going upwards. So everything is showing bull because, again, this was a green day. MACD is showing a slight uptrend. It passed my moving average. So that was the one strategy we just talked about. It tested it during the day and passed it. Look at the next day. Oops. Okay, notice how it's converging. Notice, remember what the MACD is. It's converging to cross. It's getting narrower. So let me draw just a little line so you can see. So those are things people look for, is the distance between these MACD lines. I don't have a ruler for it, but notice how it's slowly getting smaller. So does that mean you have to wait for the signal for this to go in? No. If you see this is converging, yeah, that could be a signal. Now, it may not be, you know, because look right here, it looks like it's going upwards, but then see it went down that day. You know, it's going further out, but then, oh, look, it's converging inwards over here, but then see how it goes right back out. So again, nothing's set in stone. You know, these are just math tools to help you see a bigger picture than literally looking at all the volume, all the prices, everything. Okay. Questions on that? I know there's only a couple people for today, but questions on the Bollinger Bands. Maybe did you learn something at all, or because I'm going to go a little bit more advanced. I'm just curious.
I pretty much knew all that with Bollinger Bands so far.
Okay, perfect. Okay, here are some advanced tricks. Now, with when we're looking at the Bollinger Bands, a lot of people don't look at the 1 deviation mark. So actually, before I even go into that, let me show you what it would look like on a day trade. All this stuff, all that. Okay, so this would be, what was a stock that was hyped up on Friday? Anyone knows? I don't remember. Like NRPX.
Moderna jumped pretty big on Friday.
So let's look at Moderna.
There was also NXRP.
NXRP. Okay, that yeah, I forgot what it was. They're all pharmaceuticals that were being hyped up. But so if you look at just the pre-market, now there are some more advanced strategies with Bollinger Bands. Also note Bollinger Bands kind of reset on the day depending on what you're doing. Because see how it goes. Well, it doesn't really reset, but it gets harder to calculate because it goes from one price point, because remember the market does close, so you're skipping a time frame to where things can go out. So that's why you see this converging, because you would call this a wrap, and then it expands, which could be what signals a breakout. But again, mathematically, just think about it. If you go from a small collection of data points or averages, and the averages are very close to each other, then all of a sudden the price point changes due to news, due to, let's just say, S&P 500 is down, or up, then the opening price at pre-market open will change these bubbles. So that's why it can get kind of weird or wonky, sorry. So it's just when you get more understanding of how the math works on these, it gets easier to understand over time. But so just looking at mRNA, okay, could you day trade this? Sure. Could you have bought it open? Sure, you could have. But look what would have happened if you bought it open. It opened at this point, and this is a 5-minute chart. So actually, I'll even do 1 minute. So 1 minute you could have bought. So the first minute on open, yeah, but it went all over the place. So could you day trade on a 1 minute? Yeah, people do that actually. But if you see, this is actually doing what the Bollinger Bands do, is it's showing you support and resistances at the time. Whereas before, I was showing you to draw trend lines. So if I were to have drawn a trend line, I saw it hit here, here, here. So, you could say, and I'm just briefly drawing it, because I have one data point there, but then it hits here, and those things you could start seeing. Hopefully people are putting together that now your resistance trend line became the support trend line, which I haven't talked about, just for time. So those are other things you can do on top of that. But you can see, so I'm drawing trend lines. So if I were day trading this in the morning, and I got in right here and I wanted to hold it, and you held it for a little bit, and you're like, hey, I'm not sure, and you still held it where you got in, you're like, hey, I'm still not sure, this can help you too. But what's nice is you can see the Bollinger Band expanding. So if it's expanding and it's going upwards, then that's giving you a good indication it's going upwards. So and then there's that. Now, here would be a strategy a day trader would do if you got in at a low point, because at the point of where it's at, the Bollinger Band is showing it down here, but you heard it's good news. So it could just be at the very beginning of something. And let's just say you get in. It continues to go upwards for the minute. Let me make this a little bit bigger. Continues to go upwards. Continues to go upwards, passes the 20 moving average, past my, past the 20 moving average. Continues to go up. Now it tested it back down there. So this is where what you do is set a stop loss or a profit target. Then just wait for it to go back down, continue, and rinse and repeat. You can see if you still held it, it keeps going upwards. It's hitting this resistance band. So you could say, so remember before with the Palantir, it kept hitting up, up, up. So don't just say, okay, I'm going to take a stop loss. Do a trailing stop loss. And I talk about trailing stop losses in the other video, where it just moves your stop loss further up, take profit, wait for it to go back down, do it again. Now you could go both ways. I try and say this is what I've always done is I've determined the sentiment, so the emotional, whether is it a positive day or a negative day. So if it's a positive day, would you want to short something? You could. I mean, you really could, and you may time it just right, but it could continue to go upwards. Then you're out, or you may have to double down on that and then wait for it to go down. You don't know the future. So if the sentiment's good, I mean, it would make sense for a trader to think, hey, if today's a good day, I'll get in, get my profit, wait for it to do a pullback or for it to go down, then get in again. That just makes sense for a trader, a day trader. Now, would you want to go both ways? You could. I mean, you really could. You could set your stop loss or your trailing stop. So let's say you had like one share, you switch it to two, it enters into a short position, which I don't talk about that stuff, but that's more an advanced tactic. And then you just do the same thing, rinse and repeat. So you start with one, you now have your stop, your losses to two, and then it's rinse and repeat up and down until you're ready to close. But that is advanced stuff. I don't talk about that, but just, people always wonder, well, how do you do advanced stuff? So that's one of those little things. Making it a little bit more advanced. So I talked about the Bollinger Bands. I'm going to end it after I show this, but this is just a little extra tactic that I do. With Thinkorswim, if you click, again, remember you can right click on the stuff to edit them. Here is what it means. Displace, don't worry about that. That means, well, how do you displace the movement left or right by how many units? That you can do that. That's fine. But you gotta know some math to kind of, take it to an advantage. Again, length is 20. Num dev dn, number of deviations down, number deviations up. -2, 2. If it's down, it's negative. If you're down, you have a negative day. If you're happy, you have a positive day. Okay. Here's what I do. I add an additional Bollinger Band. So I have two, they're overlapping. I edit. I change it to 1. Because what this does, remember, I talk about support and resistance. You could do 3 as well. 3 is a little bit too much. 0.5, that's a little too close. But notice what happens now. Boom. I now have multiple resistance layers. I have multiple support layers. So again, when I'm talking about that moving average, when it's touching something or those bubbles, this can help you. Because look at how this now works. And again, I just added these. I didn't choose. I asked you I had you ask me what. Okay, so it's David, and he's the YouTube creator. But we'll do another one so I can show you. But look at this. It hit your, let's just say, support 2. It went further down, but then it kept going up. Notice it touched now what I would call support 1. But it continued to go upwards. It then now passed my first standard deviation. I would have gotten out. If it was approaching there, I would have set a stop loss, or a what's it called? Trailing stop. Probably would have gotten out. Notice it shot down. Now, if it hit my support 2 for my Bollinger Band, and I know mRNA had really good news about the vaccine stuff, that would have been a good entry point. Oops. Here, right there. Notice it hits your first deviation. So that can be a strategy. If it hits your first one, okay, you can watch it. If it hits now the middle, okay, continue to watch it. Notice how it tested or touched your first deviation. Then that's when you're now hitting where, okay, it's gone 1 deviation, 2 deviations, 3 deviations. So I would say Now deviations, it's hard to determine what your strategy would be, but I go for one. It one and done for me. But then I let it ride, obviously. So there's that. And then you can see now when you have all these different deviation points, look right here. Now, this is, again, within 5 minutes. So, I could change it. Oh, no, I'm sorry. This is 1 minute. I'm sorry. So this moves fast. This is the problem that traders have, is they try and get in and they don't see the larger picture. So this is the final tip for beginning day trading. The final tip is have them 3 times. So here's what you do. Studies, save study set, day trade. So this is day. If you want to do swing, you could do whatever. So day trade. I now have to type the same thing. So mRNA, mRNA. So this is where people do their homework. So this is why you see people, or you hear about people waking up at 3 a.m. in the morning doing stuff. People think day trading, you are in and out 30 minutes. That's BS. Okay. Unless someone got really, really lucky and does like a YOLO play, like stupid stuff like that. But to be a consistent day trader, so 1 minute for my entry point, 5 minutes to see what's going on, 15 minutes to see the larger picture. Okay. That is how I do it. Now, there are some other things I do too, obviously, but when we're dealing with, and see, mine is completely different on this because this is mine, but this stuff is a little bit more I've created some. But so here now, if you're doing the 1 minute, this can show you kind of the direction it's heading, but then look at the bigger picture. So let me show you what I mean by that. So let's say, okay, I want to day trade this. I want to get in on the first, the first day, or I'm sorry, the first minute. Let me change one setting real quick so you can see a little bit better. Of course, I don't remember the setting. Synchronized crosshair positions. So if you go to chart settings, general, synchronize crosshair positions, watch what happens. Notice how your line moves with the others. So if you even wanted to have 4, like you can do 4. You could still do mRNA and then go to like even a 1 hour part just to get an idea of where things are going. So, because see, 1 minute, it's all over the place. You're like, what the F? I have no idea what's going on. So you can see the first 15 minutes, this was a huge bull. But then look what happened for the last hour and a half. Continuing to go downwards. So the strategy here is, if you see kind of like you start with a microscope to zoom in on this, you're then expanding outwards to be like a telescope to see the broader picture. That's the last thing. So you can see, I have 15 minutes twice, sorry. So you can now see, look at my 15-minute, this has continued upwards for the longest time. But then you can see on the minute part of this, so give me one moment. You can also see on the 1 minute, look what's nice about this. This has tested the middle multiple times. There. So this is 5 minutes, huge run up there. Now look, it's testing multiple times your first deviation point. That again could be multiple things of saying, hey, this is either going to go upwards or it's going to break. It's just, that's where people get, it's not guessing, but it's more educated guessing, and then using math to back up your reasoning and then feel more secure about what's going on. So if you see right here, Notice how it has just tested and continued upwards. So see on the what is this? On the 15-minute mark, because this is 1 minute, 15-minute mark. Now I said it's tested on the 1 minute multiple times, but look where it's going. It now just broke your 15-minute first deviation point. Where here, it's just kind of doing its thing. Continues to test the first deviation point. But then notice here, it's testing its second deviation point. That's why it's nice to look at the bigger picture. The 1 hour doesn't do it justice because it's just, oh, because I don't have the second deviation up, but you can see it just passes the second one or the first one, past it. So with that, we are done with part 3.